So recently we've seen a major surge in mortgage refinancing. But my question is, who in the world is refinancing right now? So currently, if you look at the 30-year fixed mortgage, you could probably get a rate right around 6.5, depending on your credit. And over the last year here on this chart, the highest the rates were damn near 8% when the 10-year treasury was at 5%. But recently we've seen a steep drop in treasury yields. So now we're starting to see a much better interest rate. Is it much better? I mean, that's debatable if you got a 2 or 3% interest rate. But right now, people are refinancing to get into a 6.5% rate. That means in the last 9 months, that's such a small buying group because not a lot of people have been buying right now. So you're telling me all of these people in this last 9-month period who bought above 7% are now refinancing? If you look at these articles a little more in depth, with all of this data and figures about demand for mortgage refinancing is up, I have to ask this question. Who is refinancing and why? Well, here's one scary statistic. If you actually look at the Federal Reserve Bank of New York, did you know that household debt has risen over $17 trillion? That's combining household debt, student loans, and mortgage debt. So again, who is refinancing and why? To be fair, there are so many analysts on television right now that are saying the consumer is durable and the economy is great. Well, then explain this to me. If the consumer is so durable, why is the consumer $1 trillion in credit card debt right now? And more importantly, why is credit card delinquency soaring and household savings at all-time lows right now? So again, I'm thinking I'm finding the answer myself with who is doing all this mortgage refinancing right now. Because when companies like Citi are cutting thousands of jobs and people want to keep spending, at a certain point, you got to rob Peter to pay Paul, and I'm pretty sure people who had those 2 or 3% mortgages are now refinancing at 6 or 7% to consolidate debt right now, and that is not a good thing for this economy. In addition to refinances going up, you know it's also going up? Unfortunately, mortgage delinquencies. And provided the increase in unemployment with companies cutting and laying off thousands of workers, I think the mortgage delinquencies are going to get worse and people are going to rush to continue to refinance to consolidate consumer debt through, guess what, mortgage refinancing debt. So in closing, you guys, when I continue to read headlines like this is giving me more and more reason enough to know that these are red flags, and I'm going to continue to remain bearish on the US stock market because I just cannot see how companies with their earnings can continue to have multiple expansion to grow stocks when the consumer is clearly tapped out. Let me know in the comments what you guys think. Thanks so much for watching the channel. I really appreciate it. I'll see you guys on the next one.